This makes up a little portion of their sales. The combined sales of these two models were only approximately 3.4% of their total. These were two of the models that, of course, really pushed the luxury EV play for Tesla and how they wanted to position themselves and really differentiate their offering when they had first come on the scene within this electric vehicle manufacturing production and gathering the mind share of consumer awareness about how electric vehicles could be sexy could be last quarter. So this is not a huge thing. It's just more directional here that we have these continuing to push lower. Along with other price reductions, Tesla has slashed the costs of its Model X and S. Cuts in China have led to differing opinions among investors over Tesla's continued price reduction in spite of the impact on its profit margin. In today's video, we'll go over some of the reasons why Tesla isn't able to sell as many cars as it used to due to the extraordinary demand, according to certain reports. I'm going to explain to you why this isn't a huge concern and why you should ignore the recent news that caused a stir. The carmaker is fully aware of the repercussions, but it chooses to decrease car costs nevertheless. Tesla is at the position in the business where it can choose to lower the pricing of its cars if it feels the need to do so. Let's discuss some of the other movers we are currently observing. Another pricing adjustment for Tesla has been done. The EV manufacturer has introduced more affordable choices for its Model X and Model S vehicles, which are now $10,000 cheaper than the base costs that were previously set. Cuts in China earlier this week, the shares were down about 1% in pre-market. They were down by 1% when I looked 2 minutes ago at how they were doing, but now they're only down about 0.4%, which reflects that investors this is not a big part of their sales. These two models only accounted for about 0.4% of their sales, I believe, last quarter, and so this is not a huge thing. It's just more directional here that we have these continuing to push lower. These were two of the models that, of course, really pushed the luxury EV play for Tesla and how they wanted to position themselves and really differentiate their offering when they had first come on the scene within this electric vehicle manufacturing production and gathering the mind share of consumer about how electric vehicles could be sexy, could be luxury. But now with more of the markets, the mass market Model 3 and the Model Y as well, that takes up the vast and far superior majority of production and deliveries. You were looking at most recently some of the delivery and production numbers that had come out over in July, so earlier this summer here, but they produced nearly 480,000 vehicles, delivered over 466,000 vehicles in totality for the S, and the X, they only represented about 20,000 of those. And that's being generous according to Musk. One of the biggest challenges the world has ever faced is the transition to sustainable energy and to its sustainable economy, and this will take some decades to complete, luckily, while these major headwinds have prevented the company from reaching its full potential in the past quarters. Hey guys, welcome back to Tesla Tomorrow. Tesla has set up strategies to mitigate the effect of market hurdles like inflation by lowering the price of some of its EVs. Similarly, the car company aims to ramp up production by building new gigafactories across multiple locations globally. When Tesla's major market hurdles finally clear up, the automaker may actually be on its way to massive success. Tesla has managed to exceed expectations and achieve massive growth rates. Several Tesla bulls believed that the best days are still ahead for the EV company. This is very true. Don't you think that Tesla's price reductions are just another reason for another strategic move to scale demand and revenue? There are several indications for this, which we'll be exploring in this video. But before we get started, if you like this kind of content, hit the like button, subscribe, and turn on post notifications to stay up to date on everything going on with Tesla. Tesla is already one of the most valuable companies in the world, valued at $801 billion. With more strategic efforts, this company is sure to surpass investor expectations with the return of the standard range trim level on its two priciest models. Tesla has reduced the price by $10,000 and the EV range by about 80 miles. This implies that the carmaker now offers new, more affordable options for customers who require less range. It's merely Tesla's attempt to slightly increase everyone's level of convenience with the EV revolution. The world's economy has been plunging owing to the effects of inflation and the pandemic. This is not only a problem for developing countries, but even as world-leading countries like the US have suffered the results of the harsh economy and the effects of it over the past few months. The cushion of this has actually been several factors, and there's a need to cushion the effect of these factors. There's a need to cut costs if Tesla's goal towards the EV revolution should remain, since its founding Tesla has continued to trail the path of innovative technology, and will likely do so for as long as it can. This is no doubt what has made it stand out amongst other EV companies, placing it in a leading position in the electric vehicle industry. With its marketing spread across different countries, globally, the EV maker has actually got a goal of facilitating the world's transition to sustainable energy, and has made incredible efforts to achieve this, according to Tesla's CEO Elon Musk. Maximizing the use of technology will actually help achieve a better future for humanity. Musk believes that Tesla will eventually integrate the self-driving feature into TVs, stating that the company's ability to do so is the difference between the company being worth a lot of money or nothing. The self-driving feature, which is a new version of its driver assistance software, will cost more than the previous one. The CEO revealed this information at an energy conference in Norway. Although this may come at an additional cost for Tesla owners, Musk revealed that the new feature will cost $15,000 in North America starting on September 5. This is $3,000 more than the previous version, which cost $12,000. Nevertheless, it's a good way to optimize the user experience and generate revenue for the company. And since many Tesla car owners have made positive comments on this feature, more users are likely to opt for it. Tesla believes that the self-driving beta software will eventually enable autonomous driving for Tesla car users. It's not news that Tesla, like many other car makers, is actually struggling to ramp up sales amidst production challenges, and with the changing market conditions, it is only expected that investors seek to make decisions that will secure their investment and, if possible, rake in some benefits. But a lot of these investors are not looking at the bigger picture. Some even forget that as much as Tesla is a car company, it's also an AI company, as well as an energy company. Billionaire investor and Canadian venture capitalist Chamath Palihapitiya had some time ago claimed that Tesla stock could be worth 3 times its value. At the time, Palihapitiya had advised investors to not sell their Tesla shares, revealing his concern as to why people would want to sell a stock that works. He also added that investors need to hold on to their shares rather than bend to short-term profits. There's a huge potential for Tesla's renewable energy components to make the EV company worth trillions of dollars in just a few years, according to Palihapitiya. Tesla's growth is much more than just EVs. The ultimate maker is figuring out a way to harness its energy, store it, and use it to help people be productive and fight climate change. By distributing its energy business, Tesla has introduced the LOB terms. Beyond its valuation at the time, Elon Musk stated that although supply chain issues have limited the growth of Tesla's energy business, the company still plans to expand production and deployment faster than vehicle production once the issues are resolved. The CEO of Tesla also stated that the company is looking to build a factory dedicated to the utility-scale Megapack energy storage product in response to growing demand. What do you think? Do you think that these recent price cuts actually spell disaster for Tesla? Let us know in the comments below. If you'd like to learn more about what Tesla's been up to,